right, some breaking news for you. Potentially, Steve Cohen is back in business unofficially. He's got some marketers poised to sign up some clients and take in money as early as next year. So Shorebridge Capital Partners told prospective clients to expect a trove of marketing materials in the next several weeks. He currently has a family office that's 0.72. Steve Cohen had those awesome 30% year returns under SAC. Will he ever get to that again? I mean, no. Like, who's going to get to 30% return? But he could be back in biz.
Alex, did you really think he wasn't going to be back in biz? I mean, really? Did you ever think that?
Your name is not Steve Cohen.
Exactly. Once the SEC said you can come back in, it was a matter of time. But congratulations to Steve Cohen.
Until January 1st. So January 2nd, stay tuned.
Okay. That's right. Okay, we're going to make a turn now to private equity. For private equity firms, one of the most promising aspects of the Trump administration is the likelihood of major regulatory reform. EY is releasing a new report today on private equity based on interviews with industry pioneers. In the report, Blackstone's Steve Schwartzman, for example, commented on the shift he believes he will see in D.C. This is what he said. We will see an entirely new regulatory approach that will accelerate the growth of the economy, job creation, and all kinds of other things that benefit investors. Joining us now is Bill Stoffel. He is U.S. private equity leader at EY. Welcome to the program. Good to have you.
Thanks for having me.
Tell us about this report and the sort of change that these pioneers, as I say, in private equity really see.
Sure. I think there's three themes that come through on the change aspect. It's on value creation, it's ensuring their own legacy, and it's also like, where is the competition coming from? And so I think you look back over the last 10 years, and there's been a massive amount of change for the industry where it was just pure play private equity. Now you have these diversified asset platforms, debt, private equity, hedge funds, et cetera. And as they look forward, those three aspects were three of the common themes that came through on all the change that's coming forward.
As you say, there's more competition for private equity. Also, there's a problem with valuation as a practical matter, because one of the quotes I saw in your report was, as a practical matter now, with a publicly traded company, it's always an auction. And so basically, you're limited in what you can be going for.
Sure. What we're seeing very recently, probably the last year or so, is that the industry, more so than ever, is really taking their chips on a very few things and putting them all in. So if you don't have something built into your thesis on how you're going to pivot this business and really take it to a different level, both top line and bottom line, then people are not actually going to go hard at that auction.
Yeah, as Steve Schwartzman also said in your report, it has to be transformation now.
Yes.
It can't just be leveraging up.
Exactly.
It's got to be transformational. At the same time, you had David Rubenstein, who's really very gung-ho in the access to more funds, because he says, we're going to see a day where you can take your 401k money and put it in private equity, which essentially you cannot do today. How's that going to happen?
That's one of the aspects when you talk about regulatory change. Down the road, that's something that has to change. If mom and pops are going to be, and the Main Street investors are going to get into private equity, that's going to be one of the ways that they have to get in.
We also are seeing a transition generationally.
Sure.
As we pass it on to the next generation. We've just seen it, for example, KKR made a big announcement. What did these founders talk about with respect to really transition?
Culture. The number one thing that came out all the time was culture. They're very focused on maintaining the culture. You think about these founders, they didn't just start in a company. They started an industry. There's a lot of responsibility, and I think they all are taking it very seriously and saying, how do we preserve this culture and this business?
And finally, how does technology fit into a private equity strategy?
Well, probably the most obvious way that we see now is when an investment goes to investment committee for approval, the question's being asked, who's going to come in? Is Amazon going to come in and buy Whole Foods? How is this going to get disrupted as we move forward? And I think you'll also see it, one of the other quotes that's in there is that the industry itself, the business of their business hasn't changed much, and it likely will get disrupted as they move forward.
Good stuff. Thank you very much, Bill Stoffel of EY. Good to see you.
Thanks for having me.
This Tuesday. And coming up, Larry Summers, just moments away, former National Economic Council Director. He has very strong opinions about what could lift wages in this country. They conflict with what Gary Cohen, who currently holds that post, thinks. We'll break that down. This is Bloomberg.